Imagine standing in the middle of a bustling, marble-floored hall in the year 1550. The air is thick with the scent of expensive tobacco, damp wool, and the frantic energy of men shouting numbers that could make or break empires. You might think you are standing in a modern stock exchange, perhaps the New York Stock Exchange or the London Bourse, but look closer at the ledgers spread across the heavy oak tables. The commodities being traded here aren't gold, wheat, or oil. They aren't even shares in a tech company. In this room, the most lucrative asset on the board is a human being. Welcome to the 16th century, the era when the world's first sophisticated financial markets were built not just on goods, but on the systematic commodification of human life. We often think of the stock market as a modern invention, a product of the Industrial Revolution and the digital age, but the DNA of our global financial system was written in the blood and ink of the 1500s. During this time, the world was shrinking, explorers were crossing oceans, empires were expanding, and for the first time in history, global trade was becoming a reality. But this new world required a massive amount of capital and an even greater amount of risk management. To solve these problems, the merchants of Europe created a machine. This machine was the Bourse, and its fuel was what we now call human capital, though at the time the term was far more literal and far more terrifying. To understand how we got here, we have to look at the city of Antwerp. In the mid-16th century, Antwerp was the beating heart of the global economy. It was a place where a merchant could walk into a building and buy a piece of a voyage to the Spice Islands, or insure a shipment of silver from the New World. But as the demand for labor in the colonies skyrocketed and the conflicts between the Mediterranean powers intensified, a new kind of financial instrument began to emerge. It started with the ransom market. For centuries, piracy had been a constant threat in the Mediterranean. Barbary corsairs and European privateers regularly captured sailors, soldiers, and travelers. In the 16th century, this wasn't just a byproduct of war, it became a formalized industry. When a person was captured, they were given a price tag based on their social status, their skills, and their family's wealth. But a family in a small village in Spain or Italy didn't have the liquid cash to pay a king's ransom. This gap in the market created a need for intermediaries. This is where the first human stock market began to take shape. Organizations like the Trinitarians and the Mercediarians acted as the world's first human asset managers. They collected donations, which we can think of as a form of social venture capital, to go and buy back captives. But they weren't alone. Private investors saw an opportunity for profit. They would buy the rights to a ransom contract, essentially betting on the captive's ability to eventually pay them back with interest. You could literally buy a share in a person's freedom, hoping that their family would eventually come up with the gold. If they did, you made a killing. If they died in captivity, your investment went to zero. It was high-stakes gambling with lives as the chips. As the century progressed, this logic of human valuation shifted from the Mediterranean ransom trade to something even more institutionalized, the transatlantic slave trade. As the Spanish and Portuguese empires expanded into the Americas, they realized they didn't have the manpower to extract the gold or grow the sugar that the European markets craved. The solution was the Asiento de Negros. This was a massive, state-sanctioned contract that gave a single company or individual the exclusive right to sell enslaved people to the Spanish colonies. The asiento wasn't just a license, it was a financial asset of immense value. It could be traded, subdivided, and used as collateral for loans. When you hear the word stock today, you think of a piece of a company. In the 16th century, if you owned stock in certain companies, you were owning a fractional interest in the delivery of human beings. The sheer scale of this required a level of financial engineering that the world had never seen. Merchants needed to hedge their bets. A ship could sink, a cargo could get sick, or a storm could blow the vessel off course. To mitigate this, they invented complex insurance policies. In the ledgers of Antwerp and later Amsterdam, you can find records where humans are listed under the same category as livestock or spices. They were insured by the head. If a ship captain decided to throw people overboard to lighten the load during a storm, he could claim the financial loss from the insurers, provided he could prove it was a necessary sacrifice to save the rest of the ship's value. This was the birth of the concept of general average in maritime law, a principle that is still used in global shipping today, though thankfully no longer applied to human lives. But the horror of this system wasn't just in the physical brutality, it was in the abstraction. The Bourse allowed an investor to participate in the most horrific acts of human exploitation without ever having to see a ship, smell the sea, or hear the cries of the enslaved. To the investor in London or Antwerp, it was just a line of red ink on a page. It was a percentage, a yield, a risk-to-reward ratio. This abstraction is perhaps the most enduring legacy of the 16th century human stock market. It taught the world how to disconnect profit from morality. It created a system where the growth of a portfolio was the only metric of success, regardless of the human cost. Think about the language we use in finance today. We talk about human resources. We talk about the value of a life in insurance terms. We talk about liquidity and assets. Much of this terminology and the underlying logic was forged in an era where the boundary between a person and a product was paper thin. By the late 1500s, the system had become so efficient that it began to influence the very nature of government. Monarchs realized they could fund their wars by selling the rights to these human trafficking contracts. The state and the market became two sides of the same coin, both dependent on the continued expansion of a global trade network that viewed people as movable property. This wasn't just a dark chapter in history, it was the foundation of the modern world. The wealth generated from this human stock market fueled the Renaissance, built the great cathedrals of Europe, and funded the scientific revolution. The very institutions we trust today, banks, insurance companies, and stock exchanges, have their roots in this period of intense human commodification. So, when we look at a minimalist animation of a stock chart today, we see lines going up and down, representing the health of the economy. But if we could peel back the layers of history, we would see that those lines are built on a foundation laid 500 years ago in the crowded, noisy halls of the 16th century Bourse. We are still living in the shadow of that market. The question is, have we truly moved past the logic that puts a price on a soul, or have we just found more sophisticated ways to hide the ledgers? As we navigate our modern economy, it is crucial to remember that the systems we use to build wealth are never neutral. They carry the intentions, the biases, and the histories of the people who created them. The human stock market of the 16th century serves as a haunting reminder of what happens when we prioritize efficiency over empathy and profit over people. If you found this dive into the dark origins of finance eye-opening, consider subscribing. We explore the hidden systems that shaped our world, one story at a time. What do you think is the most surprising way this history still affects our economy today? Let us know in the comments. Thank you for watching, and stay curious.